Federal Reserve should be cutting rates right now. Otherwise, it's going to be too late to avoid a recession if we're not already in one. The Federal Reserve wants to get to a point of neutral eventually, which means that their Fed funds rate, which is their tool for monetary policy, is not being accommodative to the economy or restrictive. But they're restrictive right now by more than 1%. So there's room for them to cut and still be restrictive. But the Fed is concerned about inflation. You see, they have a dual mandate, which means they care about stable prices, which is 2% year-over-year core inflation, and maximum employment, which means they don't want to see the unemployment rate go too high. But the latest inflation data has been tame. The Consumer Price Index just showed that core inflation only rose 0.1% in the month of May. And if you look at the recent trend, the last 3 months, and you annualize it, it's 1.7% year over year. That's actually below their target. Now, you could argue that the tariff impact has not been fully realized, but unlike persistent inflation, that's a one-time price increase. And the labor market, the other side of their dual mandate, that's showing weakness. ADP only showed 37,000 job creations. The BLS showed a bit more, but they continued to revise the numbers down, and the unemployment rate has been slowly rising. The Fed should be cutting now if they want to avoid a recession.